Okay, we were talking about the tax. This is the W-2 form. When you work a regular job, you're going to get one of these somewhere in the middle towards the end of January. And this is how you'll use this information to do your taxes. So every box has a number or a letter, and a lot of times it'll just say, what is the number in box 10? What's the number in box 17? And you enter all that in, and it's going to spit out how much you have to write a check. Maybe you didn't quite cover it all. Not enough money was withheld, and then you need to run to your employer and have them increase that amount. Okay, and then likewise, if the government has withheld more, your employer has withheld more than the government needs, then you'll get a return where you'll actually get money back. So it makes sense to do your taxes. By law, you must do your taxes, and both federal and the state government will use this. So again, you can see down here, state income tax, and then some cities even calculate local tax. So that's one of those things. Very critical that you do this every year. Okay, section 2 and 3 focuses on some of the different types of taxes. So our income tax is a progressive tax, as we talked about earlier. Money's automatically sent to the IRS, and then from your business, wherever you work, they're going to send money. It's going to automatically paid out. Okay, you have until April 15th to put in your actual tax forms. I would get it done earlier. Why wait till the last minute? Okay, so if you have not put enough into that, then you're going to have to make a payment. And if you put in too much, then you'll get a refund back. And again, if you don't pay your taxes when you're supposed to, you can go to jail for that. Okay, so it's not a do I want to, it's just you got to do it. Okay. There's another thing out there called the alternative minimum tax, and this is starting. This was originally created for rich people who had they would give a lot of money to charities. They donated a lot of money, and they were earning money in such a way that it was taxed at a very low amount. And so what it does is you do your calculations, and then if you go into the alternative tax minimum tax kind of zone as you're doing your taxes, it'll let you know you're going to probably end up paying a higher amount. So this was a way to scoop up those fairly rich people and force them to pay a certain amount of taxes. Again, in this case, 20%. Um, because of inflation and because we've never really upgraded what this is, we're seeing more and more middle class, not just upper middle class, regular middle class people being thrown into alternative minimum tax. And so that's causing them to have to pay a lot more taxes. The Federal Insurance Contributions Act, and on your paycheck, it'll say FICA, pulls up uh, basically you're going to pay taxes. About half of each will come from you, the other half will come from your employer. And so you need to understand what may have, it's not like the employer is going to take money out of their profits. They're just taking money out of what would have gone to you. So you're probably bearing the full amount. So you're paying 3.1%, your employer pays 3.1% of your taxes. After 65,000, then it stops. Okay, so that's an important thing. Same thing, 1.45 goes to Medicare. Half of that is from you, half of that is from your employer. And Social Security, once you get age 65, you will become eligible if you've been paying in enough years to draw from that. And then same thing, Medicare, it's retirement amount of money. Medicare is medical coverage for the elderly. And again, once you hit about age 65, you can now get your health care coverage from Medicare. There's lots of other taxes out there from the federal government. and all corporations will pay a 15 to 35% rate. And again, the more you make, the higher the percentage you make. Now, when you buy stocks, the corporation that you're investing in is taxed. So that's profits that could have been given to you as dividends. So that 15 to 35% is actually coming from the owners, which are all the shareholders. Okay, and then when you make money off your stocks, you also get taxed on that. So there is actually a double taxation on corporations or the owners who own the corporations. All right, and we talked about sin taxes and things like that, but those are excise taxes on particular products. Okay, so we do that in cigarette, gas, all those kind of things. And then an estate tax is, if your parents pass away and they pass down all your stuff. Okay, so if the things that your parents are giving you is worth less than $600,000, you're not going to pay taxes. But if it's more than that, then you're going to pay, 18 to 55%, meaning the more you're passed down. So if you're given like $10 billion, you're going to be paying that much higher rate of 55%. Excuse me. And then the customs duty is a tax on imported goods. Now, we have made agreements with certain countries to not do a customs duty. Okay, so an example of this would be NAFTA, the North American Free Trade Agreement, and that has eliminated custom duties between the countries of Mexico, United States, and Canada. That's why we're seeing so much production ramping up in Canada. Okay, all right. You're also going to pay taxes. Let's just put it this way: wherever there's a government entity, taxes pay for it. And so the state usually is one of the biggest clearinghouses where money is going to be given to the state and then money back down to the counties and the cities. But sometimes you'll see the counties and cities also have their own taxes. Okay, so for instance, California, we have our sales tax on products, right? And we have the corporate tax and the fees and licenses. So if you get a fishing license or a hunting license, things like that, you're going to pay registration for your car, all these kind of things. Those are all state taxes. Okay. Now the county gets money primarily from property tax. Now, if you rent an apartment, you're paying the landowner who owns that whole building is going to pay the property tax, but you are going to pay that through your rent. That's built into the cost of the rent. So as if property taxes go up, then renters pay more. Okay, so that's one of the biggest places where we get our money from schools is from property tax. Okay, our county also tax on a 0.5% sales tax increase. Okay, and then some cities like El Cajon. A half or a 0.505 of a percentage. Okay, so small amount additional for some cities. So El Cajon is one of those cities which charges a little more for certain things. And that is Chapter 9 on taxes. I need you to study. Your next text is going to cover Chapters 9 and 10.